The other method of accounting is called accrual accounting. In this method, revenues are reported or recognized on financial reports when they are earned, rather than when the payment is received. Same goes for expenses. They are matched to their respective revenues on financial statements and recognized when they are incurred instead of when they get paid out. Take Lou, for example. He does a job and sends his customer an invoice that the customer pays 30 days later, which falls into the next accounting period. Using the accrual method, he would still need to account for that income on his books since he already did the job, even though Lou got paid after he did the work. Likewise, if Lou got a bill from a vendor today, but he paid it 2 weeks later, he will still recognize that event as having happened today. You getting all that? Don't worry, here's another expert to give you the skinny.
So the accrual method of accounting requires more detail since it's non-cash transactions, such as amortizing prepaid expenses or even unearned revenue. Transactions like these can easily be missed if we're not asking the right questions and obtaining the right information to properly record these transactions. I worked with a small business owner who would track their books on a hybrid basis throughout the entire year. At the end of the year, they would convert their books into accrual accounting method for financial reporting reasons. It was a big deal. We had to review all of the expenses and bills we received in January to ensure everything was properly categorized and captured in December as an accounts payable.
I think that by now, you've realized that the biggest advantage to using the accrual method is that it gives a better picture of the company's financial condition than the cash basis method. Since all assets and liabilities are reported when they occur rather than when they are received or paid out, this gives a fuller and more accurate picture of the state of the business on the financial statement. This would allow Lou to show that while he may have only received $3,500 in payments in a given period, he actually sent out $5,000 in invoices for his services in that same period. On the other hand, while accrual accounting provides a more complete picture of the company's finances, it is a more complicated method, requiring more time and resources. By the way, that's where all you bookkeeping bosses can come in to save the day. Listen to my good friend explain a bit more about the accrual method.
Accrual method is realistic to what the business is. You can have bills that are outstanding, and then you can have invoices that you've charged your customers outstanding, but you account for that month that you bill it. So let's say you have an invoice that you have billed your client and it's for $100. You have not received that money, but you're going to account for that money given that you're in that accrual method. So you are going to account for that money in that month. And so for your month, your income for that month would be $100, even though you have not yet received that money.